So today we're going to talk about health insurance and its role in protecting savings and assets. And Ben, I'd like for both of us just kind of introduce ourselves so people know who we are, who we serve, and why we're here talking about this. But it's such an important topic. And, I know that we're here because we don't really see this information being posted out in the world, right? And so our big goal here is really education and bringing awareness to these topics. So, would you please introduce yourself? Tell me more about you and why we're here, and who do you serve?
Sure. My name Benjamin Terrell. You can call me Ben or whatever else you like. I have been in a life of service for as long as I can remember. Proud preacher's kid, and watched my dad growing up. How he basically served the church, and I took that idea of service to a different, profession. I do the health insurance stuff for folks that are already pretty healthy and don't get such a great deal on their Obamacare plan. So I serve everybody. I serve families, small businesses especially that are trying to have benefits that are less expensive but still attract employees and retain employees. Um, I serve, let's see, I've got three stepkids. I serve them as a stepfather. I've had three fosters. I've helped raise a couple of nephews. I can't even go into all the dogs and the cats that we've had. And in a way, you serve them too because they depend on you for shelter and food and love. And my goal is to just not let them down, just to show up every day and be there for them. So
I,
that's
lo-
who I serve.
I love that. I love that. And it really speaks to your heart, right? And your the compassion that you show for other humans. And so I think what you do out in the world is a reflection of who you are, and other people are drawn to you because of that. So,
Absolutely. You got to put off the vibe that you know exactly who you are because you want to attract the same type of people into your life.
mhm.
People who put ethics and honesty above making money. Because I've seen those folks too, and they seem like they've got everything in the world. They drive the nice cars, have the big house, but then I also see who they attract into their life. And I'm like, I'm happier the way I am. I make less. Yeah, make a little bit less, but I'm happy and I sleep good at night. So it's
Right.
super important.
And I think that's why we have this connection and why we connect so well too, because I'm very much a free spirit, uh, and multi-passionate, interested in a lot of different areas, and always a student of life and always learning. I'll just do a quick introduction. My name is Sarah Jones. For those that don't know me, my business is called Keeping Up with the Joneses, and I named it that. I want to highlight this because that's always such a negative term. People are like, "Oh, you got to keep up with the Joneses," like it's bad. And I am here to tell you it doesn't have to be bad. So I'm a money coach, and I work with people that know they make really good money, but kind of feel like they're on this hamster wheel of unmet financial goals and unmet financial needs. Money goes kind of towards a financial goal a lot of times, but then life happens, as you and I both know, and then the money gets redirected again. And so my clients are reducing their debt, increasing their savings faster than ever before. Most of my clients are actually small business owners slash solopreneurs, but I work with couples and individuals as well. I am a mom to two 20 somethings now. That feels so weird to say because I do not feel like I should have kids that are in their 20s, but I do. My husband and I are full-time RVers traveling around the United States, and we've done that almost 3 years now. So gypsy life all the way. And so we're here to talk about kind of the combination money and health. And even in my financial frontrunners community, I'm really hitting home the connection between physical health, mental health, and financial health. And so we're really going to talk about, you know, uh, health insurance, again, how it is really protection for your savings and your assets. So let's jump right in. And I would say, what do people need to know about health insurance that they don't? What is something that they need to know that you want them to know that maybe isn't shared a whole lot out there?
I think you nailed it. The value of health insurance isn't that you get your wellness benefits like your yearly physical, the pap smear, mammogram, colonoscopy, stuff like that. Those are like the cherries on top. Those are great to have in your plan, but those things are typically inexpensive. They're not tough for you to get on your own. What insurance does is the insurance company takes the risk that you're going to suffer something, whether it's an illness or an injury, it's going to be very expensive, like something that would cause medical bankruptcy. And they're going to take the risk and they're going to pay that bill if something happens. That's why you have plans with a deductible that you first have to meet before they'll ever chip in their part. And then even after the deductible, there's a max out of pocket where they pay, you know, 80% and you pay 20%. They want you to have skin in the game for the first bit because that's where most money is spent.
Mhm.
And then things after that, very few people ever reach that point where they're getting 100,000 to $1 million bills. It does happen though. It happens enough that we need insurance to keep us from suffering if we do have one of those bills. They want us to have about, I'd say on average for a family, anywhere between 5 to 10,000 of our own money into it before they really start to spend money. And if you go with the government plans, people call it marketplace, Obamacare, that type of thing. They want you to have about $20,000 in the game before they really start to cover things. So keep in mind, insurance is not there for your doctor visits. It's not there for hearing exams. It's there for protecting your assets should something really catastrophic happen and just it would have wiped out your bank account and all of your assets just to pay for it.
Yeah, that's such a good point. And even from a financial standpoint, I'm glad that you highlighted some of those numbers because this is an area that people I tend to find with the people I work with don't know those numbers. They don't know what their deductible is. They don't know what their max out of pocket is. And those are numbers that we need to know so you are protecting yourself. So we can plan ahead for that. Um, I've been pretty open in, a lot of my social media and sharing. I've had a lot of unplanned medical expenses happen over the past 6 weeks. And so this like hits home, completely for me having these conversations. And you and I have talked a lot off camera about this and protecting, but I think that these are not conversations that a lot of people are having, and bringing awareness to it is so important. So what are the like qualifying for benefits? Like, what do we need to know? What's the difference between maybe like group coverage through an employer, if that's an option, versus like an individual policy or plan?
Sure, no problem. So most of the plans that people know about are called guaranteed issue plans. If you have a pulse, you have a plan. That's all they require. And you pay your bill, of course. You pay that monthly premium. And that comes in the form of the marketplace, the government plans that they charge monthly and um, they don't ask any health questions. There's also the plans at work that are group policies. A lot of folks think they're really different than the plans you see on the Obamacare website. They're not. They all conform to that same Affordable Care Act law. And so their coverages are about the same. However, if you get in a large corporation, they might throw in some cool stuff like in vitro fertilization, adoption services, that type of thing to kind of sweeten the pot for you to sign up for their job. But what I really focus on, and I think what helps individuals and entrepreneurs the most, is the private individual policies.
Mhm.
And what they do is they say, okay, if you're gonna get in this group with us, you've got to start off being healthy. Now you can get sick, you can have accidents later, but at the moment you sign up, we want you to be fairly healthy. And the benefit to you is, unlike those plans you get from work or that you get from the Obamacare website, those government plans, they have a nationwide PPO network, and that lets you see pretty much any doctor that you want that accepts insurance. And that's like what 99% of some doctors accept insurance of some kind. And that puts you in the same boat as all the healthiest people in the country. The benefit to you again is that they can, because they're paying out less in hospital bills, especially when it comes to long-term care, they're almost not having to pay for any of that. You are getting access to nearly every doctor in the country, where your usual plans from Obamacare or from work, they are restricting you to an area really close to your home zip code to save money. It's a good thing, but with these private individual plans, you're able to go a lot further. You got a problem in Dallas Fort Worth, but the doctor that solves it happens to be at the Mayo Clinic in Rochester, Minnesota. Head on up there. You don't need a referral. It's a PPO plan. Just head up there and get it taken care of. Maybe you've got something else going on, a weird rash, who knows? And the only doctor that really knows how to deal with that is at the Cleveland Clinic in Ohio. Head on over. It's okay. They accept PPO plans. They don't accept those plans that you get from the government because those plans don't pay very much. That's a dirty secret. They just don't pay very much. And so many fewer doctors are even willing to take them. But yeah, definitely I want to focus on those individual plans for people and for small businesses that want to attract and retain employees without having to pay. I don't know if you've ever, experienced this, but if you have a group policy and you're the owner of the group, you're the employer, they're requiring you to pay at least one half of the monthly premium for each one of those employees. That can add up really fast, especially if you have certain employees that really don't make a whole lot of money for the business, and that investment seems like an overinvestment in that position in the company. You probably want to find something where if they are a brand new employee, very young, very healthy, they don't have any real health issues they've got to worry about, you might want to find them a different kind of plan that isn't part of the group policy, and then you're not going to have to pay, $400 a month for a person who never goes to the doctor.
Mm.
So you also want to have these plans available to you if you're trying to hire people, folks that have been with you forever, and really need good health insurance, and the folks that are just starting, so you can attract them and keep them from going somewhere else.
Wow, I love that. And I mean, these plans they're so versatile, right? Because they can help business owners support their employees. It
Yeah,
can help, digital nomads like myself that travel, small business owner, right? But travel all over. And so we need coverage that goes all over the place. Having a plan that your in network, quote unquote, is only in one small location when we are traveling all over the country, right? It's necessary for us. We can't necessarily just jump on a plane and go back to, our home state or
right.
whatever, right? And even think about too, Ben, I just want to highlight this for so many people that might be listening, that even if you do travel a lot, and say you have coverage with an employer, there's still a likelihood that you're going to need medical care in a different location if you're traveling a lot, right?
Yeah,
And you ultimately are responsible for those deductibles, for those out-of-pocket expenses. Your employer is not, right?
correct.
You are. And so when we're really talking about protecting our savings and protecting our assets, being aware of what we are as individuals responsible for is a huge part of this. And so when we're picking out our plans, we want to pick out plans that we know, right, that we can be responsible for, and we know exactly what it is that we're getting ourselves into.
Have you seen, they usually don't put this on the employee handbook, but the out-of-pocket deductible, out-of-network deductible, I should say, and out-of-network max out-of-pocket, they can reach into the 40 to $60,000 range per person or per family. They don't show that part because they expect you to stay within 100 miles of your zip code. But if you travel for work, you would not believe how many traveling nurses and long haul truckers don't have any coverage once they leave the yard. Once they get
Mm.
away from wherever they're hauling from, they get maybe an hour down the road, 2 hours down the road. They're on their own. If you have an accident while you're at work, your insurance doesn't even cover that. That's a workman's comp issue. Have you tried to have workman's comp cover you in another state? It's not fun. It's government paperwork. Again, so yeah, the original point is you need to have a plan that follows you where you go, especially if you're a digital nomad. It's not like you have, you know, the ability to just go to your doctor back home when you're 3 states over. And
Mhm.
especially if it's something serious. Oh man, I just broke my arm. There's a piece sticking out. What are you going to do? You're going to the nearest ER that can handle what's wrong, you know, that can handle your situation. And that can get to be more expensive than your diesel pickup truck real fast
Mhm.
if you went to a place that doesn't, you know, accept your plan. And by your plan, I mean any plan you've got in your home state most likely will not work in other states, even if it might not even work outside of your home zip code very well.
Mhm.
They have to save money. I say they, the insurance companies that take people without asking any medical questions. They take all the heart attacks, the cancers, the strokes, the kidney failures, and they have long-term care, very expensive care. They've got to find ways to cut costs. So to do that, they find a small area near where you live. They contract all of those doctors to take what's close to Medicare rates, like pennies on the dollar compared to what a doctor should be making. And they say, you have to take this low pay, and they tell the patients, you have to only go to these doctors, otherwise we're not going to pay for it. You know why? They don't want to pay fair rates. They've got to pay for the heart attack guy, they got to pay for the cancer guy, they got to pay for the kidney guy, they got to pay for the obese guy. They've got to pay for the people that are really expensive to take care of, and they got nothing left over to take care of the healthy people. That's why healthy people pay just as much as unhealthy people on those plans that don't ask medical questions. And that's
Mhm.
what gets you stuck out in the middle of nowhere with no coverage. But if you're already reasonably healthy, even if you've got, you know, some medical situation going on, but you're in control of it, there's still PPO doctor networks that let you go from state to state to state and still have doctors in network. You know, pretty much throw a rock any direction and hit a doctor in network type of plans. Those exist. And that's what I deal with because I was a trucker. My wife is a nurse. She's looking at her next gig up in Nashville, Tennessee today. So, you know, I want to make sure when she's up there, we're familiar with that area. We used to live there. We want to make sure that her insurance is going to be there for her. You
Mhm.
know, the plans where we live, and we're in Daytona Beach. We're right around Daytona Beach. The plans that a person gets around here, the Florida health care plans, they don't cover you. I
Mhm.
checked one plan in particular. There's one clinic in town and one hospital within an hour of us that takes it.
Wow.
One. So you get the doctor they choose, you get the surgeon they choose. And you know who they're choosing? The doctors that'll take the least amount of money. If
Mhm.
you think you're going to get the best doctor every time when you go with a doctor that's willing to take the least amount of money,
Yeah.
folks,
Yeah.
prepare yourself for this medical situation that we've got ourselves into. You want the most choices? You want somebody telling you, no, you can't go to that doctor. They're not a network. I don't care if they're the best specialist for what you have. You need to stick to your HMO. No, you need to equip yourself to be able to have the freedom of choice. And so look for a PPO always, especially if it's a nationwide PPO. They're rare, but I can help you find one because you're looking at having to deal with a medical group that has to protect their own profits.
Mhm.
And to do that, they're going to keep you on the insurance. They're going to keep you going to the right doctor that supports their group. And that's good business sense for them, but it's not good sense for your wallet.
Right. Right. You know, I've shared with you and I've shared with other people that we went, 2.5 years without medical insurance ourselves. I know it's crazy. Um, I knock on wood that, nothing major happened, but that didn't mean that it wouldn't have, you know. And one of the reasons why we didn't is because we are self-employed.
Hmm.
We are traveling all over. I had not met you, right? I didn't know that you existed back when we started traveling. And when I did go onto the marketplace with the state that we were originally from, my understanding was we had to get coverage from, that marketplace. And it was, I'll use the term, terribly expensive. And we chose, knowing what all of our numbers were, we chose to go without it because I thought we're going to actually save ourselves money in the long run. Even knowing our history, I've I hate to put this out there, but I have chronic kidney stones. I've had 18 surgeries on them over the past 25 years. And so, even knowing my history, right, we still chose to go without coverage. Did that make us terribly nervous? Absolutely. Right? Absolutely. Um, and so just knowing that there are options now that maybe we didn't have to make that choice, right? And I think that's why part of us sharing this information is to get it out there, because I did a lot of research. I found that I felt like I did a lot of research on it, but I didn't find this information that you're sharing, right? And so now I know this really has to be put out there. And I want to be clear, I'm not saying, and I don't think you are either, some of the group coverages through, employment, I don't think that they're bad. We have health insurance now through my husband. He took a full-time job. Spoiler alert, we're going to be moving locations. So now this changes, some of our health coverage. So we have to look into what that's gonna be like now. But it it is a benefit to us. The company pays all the premiums. Um, Yeah, company pays all the
I love
premiums,
it.
so we do not have any premiums. It is a high deductible plan, so we knew what we were getting into. We were contributing to our HSA account, but also looking at what other types of coverage might we need, right? Because that is confined to the area that we're in now, right? And so, again, knowing our history, there's a likelihood that there's going to be additional care needed, right? And so looking at, do we carry two different coverages? Maybe, maybe not. There's so many options out there, and I think that that's something that's not talked about either. That you can have a couple of
Mhm.
different
Yeah,
coverages. Does it become a little bit challenging in some instances? Yes, it does. But knowing what each coverage is, the purpose of it is for, um, knowing how you're protecting yourself, knowing if it's a good idea for you versus not a good idea. That's really where it's at, right? The education and knowing so you can make a really good
sure.
decision.
And one of the things that I've noticed helps a lot of people make that decision is knowing that the private plans, the plans you cannot find on the marketplace, the Obamacare website, they are tax deductible. They are
Mm,
considered a business expense. So if you're paying $500 a month, that's $6,000 a year in tax write-offs that you have right now. Realistically, by the time you write them off, and you don't have that much, you've got that much less that you have to pay into the government every year. The insurance actually only costs about 2/3 of what you're paying in premium because you get 1/3 of it back, so to speak, by not having to pay into the federal government. Another thing that helps out is there are plans that are what's called non-coordinating. They do not coordinate with any insurance you already have. So your work plan stays your work plan. It still does exactly today what it did yesterday, and that never changes. But you add to it a plan that is a PPO, so it will cover you everywhere that your work plan doesn't cover you in the United States, and it covers a lot of the stuff that you'll need if something major happens and you can't get back home to take care of it.
mm,
The way things work right now, if you only have one policy, your work policy, your Obamacare policy, and you're either on vacation or working away from home and you get hurt really bad, well, the ambulance is not going to ask you, "Hey, are you from Wisconsin?" Because we don't have any Wisconsin stuff here in Texas. No, they're going to take you to the nearest ER and get you patched up. But
mhm,
they're going to see real fast that you've got a plan that's like an HMO, health managed organization, or an EPO, exclusive provider organization. And they're going to say, that only works in your home state. That doesn't work here. So we know we're not getting paid. We will do
mhm,
what the law is requiring of us. We'll make sure you don't die here. But then as soon as you're stable, they're going to find a way to get you sent back to your home zip code to get taken care of there. If that is going to throw a wrench in your plans, and it probably will, you need to look at having a supplement that's a PPO policy, something that'll cover you when you're not at home. It will be tax deductible at the end of the year, and because it's non-coordinating, that means that you can have you can first wait for your initial insurance, your work insurance, to pay whatever it is they might or might not pay. And if they don't pay anything, at least it goes towards your deductible. But then have this secondary plan as a backup everywhere but home that can pay out an additional amount. And since they don't care what your other insurance already paid out, they're still going to, this new one is still going to pay out the full amount. And a lot of these plans, these PPO plans that you can add on top of your work plan, they don't care if they pay the full amount out to the doctor, or if there's some left over after they pay the doctor, they'll pay it to you in a check.
Wow.
So that's a helpful benefit as well. And a lot of people don't know that you can do that.
Oh,
Those who know
that's
Aflac policies are familiar with it. Aflac will do that for you. But
mm,
most health insurance companies, if something doesn't cost as much as you thought it was going to, they're not going to give you the extra. They're going to keep it because that's what insurance companies generally do.
mm.
But I know some plans that'll pay you back as well.
Wow, wow. Can you touch, Ben, on some of the health share options out there, the health
Yeah,
sharing plans? Because I think that's common with, people that travel a lot is they have the
yeah,
health sharing plan. So can you touch on that a little bit on how those are different?
sure.
Um, because again, our focus here is really talking about protecting your savings and your assets. This is all a part of it of knowing
Yeah.
what your coverage is, how much you're paying, and so forth.
Health share plans are great if you don't need that big medical bill paid. There was a customer of mine from Murfreesboro, Tennessee, and they were on, I think it was Christian Health Sharing Ministries or so. I might have butchered that. I'm not sure about the exact plan they were on at the time. It's been a few years, but she had some sort of a surgery that had to go on, had to do with the uterus, and she called ahead of time. She talked to the folks that administered the plan, and they told her just go ahead and get it done and then send us the bill. They didn't make any promises, as they can't. They're not an insurance company. They don't have to make any promises. And by the time it was all said and done, her $125,000 bill was completely unpaid. So they had to pay that out of pocket. Essentially, what a health share organization is trying to do, and it's a great idea if you don't have anything serious going on, is they take in everybody's share, also known as an insurance premium, every month, and they put that into one big pile. So they've got all this money from everybody paying in, and then they take all the bills and they put it in this pile. And they pay as many of these bills as possible with the pile of money they have over here. But the way things are, there's never enough of this to cover those bills. So they do have some restrictions. I know with the Christian Health Share Ministry one, you can't be caught doing anything unchristian. I don't know what that is. I think it changes from time to time. Maybe you have to go to church a certain number of times. Maybe you can't swear. God forbid somebody catch you smoking a little weed or something. I don't know. I'm not sure exactly how it works. I just know that that's one of their restrictions to help keep their costs down so this pile of money isn't spent so quickly on all these bills. They also will only pay for one hospitalization or maybe one surgery for each medical issue that you run into. So if you end up with lung cancer and they take out a lobe, then a few months later they find the same cancer in another lobe and they want to take that out. That second lobe is on you, even if they didn't pay the full amount of the first one, which they can't because they have a cap of 150,000 or something like that per surgery. I think they're trying to do something really cool and really good. I just don't think it works. I think that's why we have insurance already set up, and we have an insurance kind of a governing body in every single state that says you can or cannot operate this way as an insurance company. You have to pay these people's bills
Mhm.
or else you don't get to operate. Well, the sharing plans, as cool as they are, they don't have that governing body over them in every state. They're allowed to get away with a lot more things that insurance companies are not allowed to get away with.
Mhm.
So is it a good idea to get one? I guess if I was in your position a while back and I didn't know about the PPO plans and being able to travel around with them, but I also wasn't going to take that Obamacare plan that wasn't going to follow me from state to state while I traveled, a sharing plan would have been a better option than nothing. For sure.
Mhm.
100%. They will help more than nothing. But is it a great plan compared to the right health insurance policy, the policy that actually fits your lifestyle and your needs? No. No. So
Yeah.
it just depends on everybody's individual situation. I've met a few people where it made sense. They were super healthy. They, You know, there wasn't much risk in their lives. You know, they might have drove a Subaru or a Volvo, and even if you do get into an accident, one of those, you're probably fine. You know, they didn't speed. They didn't, you know, they didn't jump out of airplanes or go to rodeos. You know, these were very safe, healthy people that like to run for fun. I don't know why you do that, but they run for fun. Very healthy, good everything. All their tests come back great. So those folks might be able to get away with it for a while, but eventually we all run into those $100,000 plus bills. And if your health share plan, in the case of this lady that was in Murfreesboro, Tennessee, they looked at her uterus and said it's a pre-existing condition.
Mm.
Yeah, a uterus is pre-existing. You're born with it.
Right.
How do they, again, and these folks sleep at night? There's nothing Christian about saying we can't pay for your hernia surgery because you have a uterus.
Right.
I mean, come on, that's brain dead. They're not even trying at that point. They're just like, yeah, we know you were looking at a PPO plan. So we're not gonna, I mean, I don't know what happened, but it ended up not being good for them. And
Yeah.
that's just one story. So there's
Well,
quite
and
a,
the thing is, as people are looking for these coverages for most often the bigger issues, right? Not
yeah.
the smaller ones, because the people that are, um, I'm gonna put out a generalization here that a lot of the people, and I'm just gonna speak from, some of my experience being a full-time RVer. A lot of people that do travel full time have kind of planned ahead, and they've kind of got their finances, a lot of it, in order, and maybe they own their own business, or, maybe they work for somebody else and they're traveling. So they have maybe some coverage, maybe not fabulous, but they're looking for that additional coverage, right? And so they do look at health sharing plans, and it's not for like the little, going to the doctor, because they know that they can pay, the $50 to go in, right? They can negotiate, they can ask for the cash, payment. Hey, if I pay today in cash, what kind of a discount are you going to give me? But it really is the people that are looking for those bigger things, like, because we know things are going to happen, we just don't know when. And so, some of those plans, I think, can catch people with their pants down, so to speak, right? And when you really need that help, and you are, relying on it, that's when it really hits you, because you've already gone through something. So, and I'm not saying that they're good or bad. I'm not the expert, you are, and you're not saying they're good or bad necessarily either, but it's really about figuring out what is each individual situation and what might be best for them.
And if
Uh,
you've got a pre-existing condition, they've got little things in there about pre-existing conditions as well. They don't want you to jump on the plan because it's suicide for them to say, "Oh, you're sick right now. Well, hop on. We'll go ahead and pay your old bills too." No, that would drain their finances in no time. They've got to have only healthy people jumping on their plans. And to do that, they just say, "We're not going to cover your pre-existing conditions for a certain amount of time or ever." And so if you think, oh, I'm going to sneak on, they're never going to know about the doctor in Idaho that gave me this XYZ diagnosis when I'm down here in California getting treated for it. Yes, they know. They know. They will find out, and then they'll deny. They just won't pay your bill, and you'll be up the creek without a paddle. So you got to remember, the insurance companies and health share plans are run by the same type of people. We want to do the most for people that we can without losing money. And when you get really sick people or people that injure themselves a lot just because they are high risk, whether they work on roofs or, the arborists that climb trees every day. And
mhm,
trust me, arborists break bones. They break the bones on their way down, and sometimes when they hit the ground too.
mhm,
They want to make sure that people like that aren't jumping on the plans and using up all of their resources, and costing the company many, 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 many tens of thousands of dollars while only paying in a few thousand per year. So they're
mhm.
careful about letting people on the plan that they think won't cost them anything. They're trying to they're willing to take on some risk, not all the risk, but some of it. So just understand that every company you work with is going to be eyeballing you too a little bit, except for the plans that are guaranteed issue, like your work plan or those government Obamacare plans. They don't ask any medical questions. They will take you if you're going through cancer treatment right now. And if you
Mhm.
are, by golly, get one of those or get a work plan. Get something that doesn't ask medical questions, but just starts even if it's a high deductible plan, I'd rather pay $19,000 for my cancer treatments than the full $1 million that they're going to charge.
Right. Right.
You
And
know?
and that's a great even full circle moment here with what we're sharing, right? Because it really is about protecting your savings, protecting your assets, protecting yourself. That oftentimes, not all the time, but oftentimes something is better than nothing, right? And you take what you can get right now to help. Because as you said, I'd rather spend, the 19,000 knowing that that's what I need to come up with versus not having coverage at all. And, and I'm not going to say that like GoFundMe pages are terrible, but how often do we see a lot of the GoFundMe pages to help out because insurance is not covering or people don't have coverage, right? And they are going through something catastrophic. And so I think this just brings us back around to really understanding how health insurance can protect us, um, what information we need to have, knowing that we can go to somebody like you, Ben, right, and ask the questions and not just be thrown into something, but really have options and to figure out what's going to be the best option for us, both financially, health wise, what makes sense for our lifestyle. Are we, a business owner with employees? Are we a digital nomad? Are we gypsies traveling around? Who are we and what makes the most sense for us?
Absolutely.
Mhm.
Um, you know, if I'm having a Joe Biden moment. Give me just a second. That was a good. I liked how you turned it all around, but it's a segue into something else. But really, the important thing to remember is there's a lot of plans I don't sell. They
Mhm.
just and they would fit a person's situation. So I'm talking to a prospective client of mine, and they tell me, "Well, I've got diabetes. I got type 1 diabetes. Otherwise, I'm healthy as a horse. I run marathons. Doctors marvel at my health, and I'm going to live till I'm 99." Underwritten private plans, the ones that do ask medical questions ahead of time, that's an automatic no. They know
Mhm.
that typically, maybe not with you, but typically type 1 diabetes means there's going to be problems down the road, very expensive chronic problems, and they don't want to touch it.
Mhm.
So with a person that's with a person's got something like that, I would look at guaranteed issue plans, some of which I sell, but most of which I don't. So they're going to get the best plan for their situation. I will not recommend a health share plan to anyone because because of what I know, because of what I've seen. When they won't pay a $125,000 bill because their uterus is a pre-existing condition, I don't trust organizations like that. They don't have a fiduciary responsibility by law to pay that bill, so they don't have to pay the bill, and they
Mhm.
won't sometimes. It's not that they're mad or mean or terrible people. They just run out of money before they run out of bills. And so they have to be picky. They have to be choosy. And that's okay. That's what they're supposed to be doing with those health share plans. There's also the short term plans. Very rarely are they ones that I recommend, but in certain situations, they're the cat's pajamas. Suppose you've only got 2 months in between the end of your old plan and the beginning of a new one. The best plan for you might just be one of those little short-term $150 a month plans. They don't ask medical questions right away, so anybody can get on to them. Here's the catch. They ask medical questions after you get a large bill. They're okay paying the little bills. That's cool. No problem. You get a catastrophic bill, anything going over, in fact, anything going over a few $1,000s, they're going to start looking into your medical history before they pay that bill. And they're going to be able to see, oh, it looks like you had this very similar issue in the same part of your body 3 years ago. This might just be a continuation of that. We're actually going to go ahead and let you pay for that. We're going to give you the opportunity to pay for that yourself. So I don't recommend those because they don't do their medical underwriting. They don't ask the medical questions until after you've already got a bill that you don't want to pay.
Mm.
So the reason they're only $150 a month is because they know they don't have to pay diddly squat. There's a rare person that is healthy as a horse and they get on the plan, has no pre-existing, and then suddenly has a heart attack in that little 2, 3 month period where they have the plan. That guy may get out of there smelling like a rose because all of his bills are covered. They couldn't find a way to deny that one.
Mhm.
Man, that really hurts us.
Right.
But For some people that are already healthy, they don't have pre-existing, and they just want something to cover them for accidental injuries, that type of thing, then a short-term plan might make sense. I don't sell those, but if it does fit your situation, or if it's the only thing you can afford right now, 150 bucks a month per person, by all means do that. It's better than nothing, but it's not one that I sell, and I'll only point it out if I think it really does fit your situation. Sometimes people see the dollar signs being lower. 150 bucks a month is a pretty nice price. It's a pretty round figure. A lot of folks can fit that in their budget. What they don't realize is that what you save in the short term, you're going to have to pay in the long term. They're going to come back after you if you've got any kind of pre-existing that they can apply to a new bill and say, well, we can't pay that because you've got pre-existing here. They're going to do that because that's how those plans operate. There's nothing wrong with it. That's just how they operate. So I don't recommend those or the health share plans most of the time. What I really focus on are three main areas: the private plans, which are good for folks that are reasonably healthy and not going through anything chronic right now. And then for folks that do have chronic problems, or if they weigh more than they should for their height, I'm a good example of that for now, losing weight fast right now with diet. But for folks that weigh too much right now, a good plan would be to get them on one of the government plans. It's better than nothing. Sometimes you can get them for really inexpensively per month because they'll base the premium on your income. And if you're good at tax write-offs, which I am, you can show a lot lower income than what you really have. Of course, it's all legal if the IRS is watching. It's
Right.
legal. I'm very careful. I don't want to get tangled up with any IRS agents. They're very good people. They never go after folks like you and me.
Never, never.
So be careful there. But yeah, you can get a pretty low price. Now they're not going to pay for diddly squat until you reach about $19,000 out of pocket. Some of them a little bit lower, but at least you'll have coverage for the catastrophic stuff.
Mhm.
So and then the third one I focus on is what's your work plan? Of course, I can't do anything about it. All I can do is go through it with you and compare apples to apples, what they have versus what you might get if you bought a private plan. A
Mhm.
lot of folks don't know that if you talk to your employer real sweet and real nice, a lot of times they'll take the cost that they were paying for your health insurance and they'll give it to you tax free if you apply it to a private plan that you purchase yourself. The reason they want you to have health insurance is twofold. One, they want you back at work. If you get sick, if you get injured, they want you taken care of so you can get right back at work. You're valuable to them in that way. Also, they want to make sure that you stay with their company. They want to make sure that they can show through their, these great health plans and other benefits that they actually do care about you. And what says care better than finding the best insurance plan for your situation? So if you can convince them of that and say, look, this other place I was looking at a while back, they have this private plan option. I can just sign up for it and they'll give me the money tax free instead of making me participate in that group plan. And then, whoa, hey, all of a sudden, when you realize you can pay less for that employee's private plan than you were paying for their group plan and they get more from it, they're not going to go anywhere else. They're going to lose that plan if they do. So yeah,
Right.
it matters to them too. That's so work plans are really important. And the
Mhm.
way that work plans work, if it's a group policy, the employer is paying at least one half. Also, the guy who takes care of the group policy is basing everyone's premiums, their monthly premiums, on the oldest, least healthy guy that works there. I say guy, it could be girl too. They're equal opportunity chargers. They will charge you and charge you and charge you for the least healthy, riskiest part of your population. So if you've got a room full of, I'm sorry to pick on you guys, but old truckers that are just, potbelly and they've been driving for 20 years and they still use the CB. Well, that's who they're rating. They're rating the entire group based on the least healthy people. So if you're a brand new guy, skinny as a rail, you still eat carrots and you're really healthy and you run marathons, you're still paying insurance based on that guy's health.
Mhm.
That's how group policies work. With private individual policies, they look at your gender, your zip code, and your age for each person on each plan. That's how they figure out how much it's going to cost. So the folks that are healthy get to pay healthy people rates.
Mm.
In fact, a lot of folks, instead of paying less, what they do with me is they end up getting all of their benefits for the same price they would have paid for just health insurance. They get their dental, vision, their extra accident protection. They get a little bit of accident disability, some life insurance, some critical illness, and it all fits in the same price they would have paid for just their group policy health insurance. So when you do that, you end up saving a lot of money for people, including the employer, because with the employer, you don't have to pay half of that private plan. You can pay $20 if that's all you want to put toward it. Brand new person, maybe he's young and healthy, she's young and healthy. They don't really have anything medical wise going on. And all they've been hired to do is sweep the floors. That's an employee you don't have to invest a whole lot in just yet. So,
Mhm.
get them $100 a month plan with me, and you pay the first $20 of it. They're getting health insurance for $80 a month. It's a win-win.
Yeah. Yeah, I love that. And I love to just that there are so many options, right? And
Mhm.
so I'd love to put all of your contact information. We'll put it all in the show notes so people know how to get in touch with you because I think it sounds like the best option is people just give you a call or, send you an email or whatever and schedule a time to really sit down with you to figure out what is going to be the best option for them
Right.
as individuals. So,
I schedule calendar links about 15 minutes at a time. So each link that a person signs up for, but it actually takes off half an hour out of my calendar. So if there is questions to go over and the situation is more complex, I really do want to sit down and help you figure it out. Even if you don't buy anything from me, that's okay. I'm helping people, and that's the biggest part of my job. In fact, most of my time is not taken up with prospecting or trying to find new people to sign up. I mean, as much as that helps pay the bills, that's not most of what I do. I mentioned off camera before that I spent a good amount of time earlier today, kind of a complex situation where a client of mine is interested in getting something simple done for their kid. It's like an EKG type of thing, and because it's a kid, the doctor says you have to go to a specialty hospital to get that done because it's a kid, even though their electrical signals and heart rates and stuff all work about the same. And so, a specialty hospital with all the latest gear and the highest paid doctors is going to charge you around 2 grand. What you usually pay for something like that is around $500 or less. In fact, we were able to, after searching around and doing some homework on my end, we were able to find someone who would do that for around $29, even without insurance. So having an agent isn't just about finding the best policy. It's about servicing that policy and servicing the people that have the policy after the fact, because you're going to run into situations where somebody wants to charge you a whole lot of money for a little bit of service. It's not difficult for people to run an EKG. I mean, I've watched people that are not even nurses do it. It's not hard. So why are you charging $2,000? Well, because the doctor that's going to look over them and go, yep, they're fine. That doctor went through, an extra 8 years of medical school to be a heart surgeon for pediatrics. That's what you're paying for. And will they catch something that maybe another doctor wouldn't catch? It's possible. But if your
Mhm.
only problem is you've got maybe a slight hiccup in the in the EKG, you most likely will not need anything. If there's no other symptoms that a child is showing, a child is most likely fine. I'm going off of my own experience here with my sister back in the early 90s. Heart murmurs scare the parent, or any kind of heart problem or any kind of EKG problem can scare a parent, but most likely the kid will be just fine.
Mhm.
Most likely they'll grow out of whatever it is. It's just part of growing up. Is it best to get them checked out? Absolutely. Definitely get them checked out. But do you have to go to a specialty hospital to do it and pay the full specialty hospital price? No. You can get away with going to a clinic that does EKGs all day long. That doctor's going to know what he's looking at too. And if
Mhm.
they're willing to do it for $29 because they paid for their equipment years ago, well, that's just one of the benefits of having an agent, someone who actually is looking to help you save money, not spend money.
Right. I love it. I love it. Well, thank you for sharing all this information, today and um I think that it's such an important conversation to have. And we're going to be back talking about more things, health insurance related and finance related and everything. So thanks again, Ben. And yeah, looking forward to our next conversation together.
Me as well. Thank you so much. It's been a pleasure to be here. I always have fun talking with you. So the fact that we can record one and put it up for people and just the information that you and I share back and forth has been helpful to me in my budgeting. And one of the most important things I think is the mindset that you helped me build towards money because I grew up with, hey, if it feels good, do it, including when you want to spend money on stuff you don't need. I've had German cars I didn't need. I've had a lot of German cars I didn't need, or sports cars, that type of thing. That's my weakness. But just thinking about what happens when I want to go camping, when I want to go grab an RV with me and my wife once all the kids are out of the house and just travel around. Well, I won't be able to afford that if I'm still paying for a Mercedes. Most likely, it's better to put the Mercedes money into a nice RV or a diesel pickup truck to pull a fifth wheel. So as a former trucker, I know how much those diesels cost. So,
Right. Right. For sure.
well, thank
For
you so
sure.
much. Thank you so much, Sarah, for having me on. And we will schedule the next one next time, I guess.
Perfect.
All
That
right.
works.
Have a good one.
You too.